Good morning, traders. It is 6:54 a.m. Chicago time on Tuesday, the 4th of October, 2022. This morning is a special broadcast. It is being done live or early and is being pre-recorded for the usual time, which is at 9 a.m. Eastern. This is episode number 2328. There's an event that my wife organized with my little girls that I plan to attend this morning. We're just going to take them out for brunch before school, and I did not want to miss it. So I'm doing this early just to make sure that this portion of my day is done. Again, I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market's on a tear. We have strong risk-on sentiment. The RBA hikes 25 basis points versus the 50, so a lot less than expected. They are sleeping. They're sleeping. I'm sleeping. They are slowing down the pace of rate increases. They're suggesting that some of the macro data is reflecting that the market's responding to their intervention, and therefore they'll continue to hike, but they will slow down. The market really loves that news. Also, the UK has rolled back those tax cuts that caused the market to tank the other day, and the Treasury market to go bananas. The gilt market that has been cut back, and this is really helping out the Treasury market quite a bit. This morning at 10 a.m., the biggest release ahead of us really is the JOLTS job openings. This is an important figure that measures how many jobs are open and unfilled. It's been at a historic high of about 11.5 to 11.7 million jobs in the U.S., just unprecedented. And it creates pressure on wages. The higher the number, the more pressure there is on wages and employment, and therefore inflation. And so the Fed's going to be looking for this JOLTS job openings number to fall. The expectation this morning for JOLTS is 11.1. The prior is 11.239. And anything below 11 is likely to cause another hop higher. We do have factory orders. We have a bunch of Fed speakers today: Williams, Logan, Mester, Jefferson Daily, and so on and so forth. The S&P, as you can see, the Europe is on a tear, up 3.57% on the Euro stocks and 3.06% up on the German DAX. These are pretty big numbers. No earnings to speak of, and the S&P is on a trend profile this morning, multi-distribution profile in the S&P with a wide range, giving us a trend day. It is well ahead of its VWAP in mid, and is very much on a buying frenzy, with the point of control shifting above 3,700 at 3744, with the range of 75.25, and inventories being 96% long. This is a gap up day into balance, is what we have here. So we're back to 3750. Basically, we've exceeded the 3705. We had a pretty good run yesterday afternoon, and we ended up closing at settling at around 3690 quarter, and we are well on top of that. The Nasdaq's the same. The Nasdaq's up over 2% this morning, 232 points. This very bullish sentiment. So let's move to the charts real quick. So that's the general overview. Let's look at yesterday and what it told us. Yesterday, really on point, was looking for this kind of relief rally. Yesterday, clear trend yesterday. It stayed well ahead of the VWAP in mid. And it was very clear that that the overnight session was rejecting those lower prices. Anything below Friday's low was rejected overnight, and then the attempt to push down in the morning, if you recall, the idea yesterday was expecting a pullback to around 36.20. It went to 36.17. I suggest you take a look at yesterday's Trader Bite if you want more details. And then from there, it pulls back, gives a very clean setup right here in the 28-29 zone for a long, and then it just pushes away. We managed to put in an IB high right against the 36.70, consolidate there for a bit. Doesn't touch VWAP or mid for the entire session. Basically a trend day up yesterday. So very bullish day with a very bullish close. The market closed and settles in the upper quartile of the range, telling us that we've likely not found our sellers. Our sellers in yesterday's session were likely to explore higher. We open up this morning, pullback small, and immediately push up back to the mid again. Another mid long. This is a classic setup that you guys have heard me talk about a lot, probably. Another mid long, and the rotations say it all. The up rotations are heavy, the down rotations are weak, and to me this is a clear trend up with a relatively weak high coming into this morning. Now this is an hour before I normally do my Trader Bite, so there's a lot more volume that's likely to come in. Our volume is at 323,000 in about an hour. I'm anticipating that the volume will be within the range of what we would call unusual or outside the norm or outside of one standard deviation, which down here is 350,000 contracts. So I expect that we are likely to exceed that. So overall, what we're going to have is a gap up day on a relief rally on a market that has been selling quite a bit. And it is likely, so gap rules apply today. So some of the things you need to watch out for today. I thought I flipped this already, but I guess not. Some of the things you need to look for. So here's what we've done. We've been selling off, and yesterday was really a reversal day. We broke the one-time framing down that we were on yesterday by taking out that 83.50 or 84.50, I forget. I think it's 83.50, and we pushed into last Wednesday's range. And what we're doing this morning is we're taking out that high from last Wednesday at about 37.40, I think. And we're pushing into this gap that remains here, and we're getting right into this day here, the 22nd, and we are very likely to squeeze back up. The key level here is that 38.80-ish, and then above there 39.50, which we're not likely to attain today. It's quite a bit of range, but this is really a coiling, a balancing market that is breaking to the upside. We did break down last week, especially on Friday. We sold off a fair amount, but it looks like the test down, although it looked quite bearish yesterday, the test down did not hold, and yesterday was the reversal day. So we have what is an intermediate time frame low here. See how this closed on Friday at the low right here in the last hour. And then, so what we have is an intermediate time frame low at 36.17. Yesterday it attempted to push 36.17. Yeah, is that no? It isn't. It should be 35 something on that. 35.96 is what it should be. Is the low, and then the 36.17 actually is where we ended up pulling back to yesterday against that 36.20 expectation. So here we've got an intermediate time frame low, 35.96, and we are likely to walk ourselves back to where we've had balance, which really is between 3,900 and 3,850. There's a lot of room here for bulls to continue to push. There's not much on the calendar in terms of things that could change this until Friday. Friday we have U.S. unemployment at 8:30 a.m. and that's the big one. Other than that, it's really free to roam, I believe, today. So this is what we've got right here. We've got multiple days of balance. So let's merge these. And we're working our way out. Oh, so let's include yesterday. Didn't want to include yesterday, but so let's include yesterday, and you could see that we've got this big fat profile down here, and we're trading at 37.45. We have quite a bit of support now underneath, and not only that, but there's a lot of fuel in here. This is based on TPOs or 30-minute the 30-minute bracket. These are 30-minute bars squished together into a histogram, but you can associate volume with those with this profile, and there's quite a bit of fuel here to push into 83.50 and then eventually 38.75, which is this combined profile up here, which is the next balance area that I talked about. It's really 38.80. So this is my expectation, is we are likely to just swim right through the 3800 and push to 38.80 for our next station, our next resting place in terms of balance. Here's what we've got this morning. Really, there's nothing about this right now that says we're likely to pull back. So in brief, bref, as they say, in brief, basically what I'm looking for here this morning, let me scooch this back 1 second. Things are kind of slow here. This PC is just choked up this morning. I've got too much stuff running. That's the problem. Okay, so what are we looking for this morning? This morning we have a gap. This is a key thing to remember. So gap rules this morning. I expect an open, this is likely to continue to squeeze. I expect a response early. I expect the gap to remain open between the current session and yesterday's session. So I expect this thing to pull back, but I'm looking for it to squeeze through to the 37.80 and make an attempt at the 3800 and finish in the 80 zone. That's the first scenario. So I expect somehow that the inventory is likely to balance itself this morning early, pull back, expecting the gap to remain open. The gap is really here. To remain open, I don't expect it to breach into yesterday's high, and then I expect it to turn around and squeeze through. So we are battling in a key area right here. The low of this one island day, this one kind of lonely day, and the high of this recent pullback. We are trading right against this zone, this gray zone. So I expect us to get a response here, pull back, hold the gap, and push higher. 3800 becomes the target, and that's your scenario one. If we're not able to do that, then I'm looking for it to squeeze early, run out of steam, look for an impulse down. It has to have that impulse down, back to the open, consolidate, and then fall for a gap fill, and then we have a gap to settle trade back to 36.90. That'll be scenario two. Okay, but in either case, we have all the indications of a market that's relatively strong. We have a gap open. This is not based on a news event, so there isn't really an SOC here to worry about. In other words, there isn't a single event that's caused the market to jump, and so This is not likely to pull back, in my opinion. This is likely to be a gap and go situation. You do not want to trade against a gap. So as we're gapping up, you do not want to trade against an up gap in this environment unless it falls back into the range. So remember that as a rule, maybe you should write that down. As a rule, if we're gapping up, you do not want to sit here and try to pick off tops because you can't find a long, or a long is not, you shouldn't be finding trades. They should be coming to you. Um, if a long doesn't set up for you, don't sit there and try to pick off highs because it looks like it went too far. There's some imaginary resistance figure. The market's already spoken. It's quite bullish. If it doesn't fall back into the range of yesterday, really there's no business shorting it. There's no business shorting it, and it's likely to continue to squeeze higher. So we're looking for 37.80, and we're looking for 38.05, 3800 area for today. Okay, so we're looking for the 05 on the high side, and we're looking for the 90 to the bottom. Okay, I'll leave you with that. I don't have much more to say other than be sure that you have signed up for the giveaway for this MSI high-powered laptop worth about $1,200. Tomorrow I'm getting on with, it's actually not Tom Canfield, it'll be Brian Lund, getting on with Anthony Credelli on the Futures Radio Show to talk about trading in this volatility. This will be at 12 p.m. tomorrow. The giveaway sign up ends at 11 a.m. tomorrow. Be sure to sign up for that. Good luck today, and I'll be piping in later. If you're a Convergent member, there's a notice that I will not be in until about 9 a.m. Central. After I drop off the kids at school, I'll be in, and then we'll be commenting on the markets in the Maven channel. Catch you all in there. Take care.